Welcome back to EERAC TV. This episode of number 5 of this long-running saga, brought to you by me, Ron Radway of Essex Equity Release Advice Centre, and David Payne of MortgageComply.com. And once again, this video will take up about 5 minutes of your time. Regular viewers will be awaiting this episode with bated breath, as they will be expecting the final piece of the jigsaw in our proposal to be revealed, namely remuneration. Unfortunately, you will have to wait a bit longer, as I must share with you a trauma that has recently severely impacted upon my business model, a trauma that will also affect you. So what's the problem then, I hear you cry? It's from Collegiate, the professional indemnity insurer, and it is their supplementary questionnaire for equity release, which on the face of it is not unreasonable. They're entitled to dig down until you see the questions. They are unanswerable, unable to be complied with. And I say that, as regular viewers will know, as a premier player in this field, the Cristiano Ronaldo of equity release. And if I can't answer it to the satisfaction of this insurer, then who can? Let me give you an example. Let's look at number 5. Please confirm the beneficiaries of the client's estate are informed and that the evidence of this is in the suitability letter and is retained on file. I don't know how experienced you personally are with equity release advice, so let's drill down a little bit. Informing beneficiaries of an action is at the desire and responsibility of the client, which is recognised by the Equity Release Council and the FCA, as their own edict is that it is recommended that the client informs the beneficiaries, which forms standard procedure. And indeed, it cannot go any further than that. For how can you confirm an action has completed if you can't monitor it or control it? What if the client says, I'm not doing that, it's none of your business, none of their business? I don't talk to my beneficiaries due to a family rift, whatever. But if they do agree to do so, how do you ratify that as an advisor? You speak directly to the beneficiaries, record the call, request a handwritten note of acceptance from them. And if they refuse or simply don't want to, then am I supposed to withdraw? The logistics of this are ridiculous in concept and also a clear breach of the Data Protection Act and therefore illegal. So I have a choice in my answer. I can lie and I can say, yeah, I'll do all that. And thereby I'll obtain my PI insurance. But I won't get paid out in the event of a claim. And if I tell the truth and say no, I'll get declined, which is what happened. Without discussion, without appeal, without direction or explanation. As you are all aware, it is illegal to lie on any application form, and in any event, a pointless exercise if you're not going to be covered. Most of the questions are either banal or indicate a lack of understanding of the process by the insurer, or they're awkward to answer. But I could have been equivocal and overcome. But that question, number 5, and another question regarding ongoing advice post-completion are binary. They're either yes or no. There's no escaping them, nor the ramifications of your response. So what does this mean to you and me with regards to PI and equity release? Well, for me, I've managed to overcome it, and I found an insurer with knowledge of the sector and the process pragmatism that's required. But I got it purely down to my status in this sector. It wouldn't be available to anyone less committed or experienced than me. And it comes at a price. Premium nearing 7,000, excess of 5k, capital adequacy of 12,000. There's some of that. And the impact on yourself? It really depends on whether or not you would like to enjoy the commercial benefits of arranging equity release. If you don't, that'd be fine, apart from forfeiting a very lucrative income stream. But if you do want to be involved with equity release, or even just considering it, then you have a real problem, in that you will not be adequately covered by PI. And as you will be deemed to have deliberately breached the T's and C's, you will not be able to turn to your compliance consultant for protection. He will be powerless to defend you. Compliance consultant in our case means David Payne, who I've known for over 15 years, and I've never known him to be so animated over any issues. So I'd urge you to study and reflect on the points I've made and to reach out to David for clarification. He will be contacting you in any event shortly as a matter of urgency. And all that without the latest industry buzzword, vulnerability, which will be the subject for discussion shortly on this channel. The next video will actually be the one you're waiting for, and it'll be there in a couple of days, which is a bit more uplifting. It will all be about money and how to make it. Bye for now.